There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Let's take a look at the charts. Just wanted to kind of go through this real quick. Let me just remove this here. All right, hopefully it's easier to see. So as a common theme that I've been talking about in both the Saturday calls, and haven't really touched on too much in the limited amount of Tuesday calls that I've done, I did want to address that at least today. Let me just double check something, make sure this, with this whole new microphone system I set up, just want to make sure everything's coming through loud and clear. With the, let me jump back here. I'm going to start off with FinViz. So just go to finviz.com, click on all charts and futures markets, and you can see equities across the top. I show this a lot because I want everybody to get a feel for kind of what's going on, but you know, as equity markets have been sinking since the beginning of the year, almost all major currency markets have been sinking with the exception of the US dollar, which has been rallying, and the surprising thing, I think, to many of my listeners, clients, colleagues, Auvorians, subscribers, the like, on these weekly casts, is that I just, outside of energy, and I'm going to show you right now, we just don't see any inflation. I mean, it's ridiculous because, you know, all people pay attention to is grocery and gas, but when you peel away, or the rest of that lining, I mean, look at crude oil today. I mean, I know this isn't really a trading thing, but try to have this show more about a macro type view. I mean, energy is getting absolutely clobbered today, to the tune of almost 8%. So I think the max pain trade on this is lower. Max pain meaning the most that are short oil that have to suffer, essentially, right? But if we go back and just look at a broad scale, like I was just doing with one of our advisor partners a little bit earlier, you know, I see outside of energy, heating oil is getting beaten up. These are weekly charts, by the way, so let me just drop back to daily. But look how much gasoline's come down. Heating oil, nat gas, right? In terms of just since June, right? It's not being talked about as much. Look at how the metal space is falling. I mean, every metal, including copper, was just getting absolutely clobbered, right? So from a precious metal standpoint, in certainly farmland, which is what I like to call it, these rows, it's farmland stuff. Look at all these prices are down. Look at orange juice, coffee. Look at coffee, it's getting clobbered. It's like back to where it was last year. Look at lumber in terms of its move down, sugar, right? And then we get into the credit space, you know, which is rallying. Quite frankly, I think it was oversold, right? And I know a lot of you on this podcast maybe not as concerned about all this, but this absolutely can have an effect on equities. So the key thing in any of the Auvorian subscribers, anybody who listens to these casts, is really essentially the fact that the U.S. dollar has been rallying as a strong currency, and everything else in the major land has been weak, right? So it really is a theme of the lesser of all evils, in my opinion, because I don't really think the debt levels that the U.S. has to offer is any great thing that the price of the US dollar in relation to the euro in this particular chart and a couple of other currencies, yen and so forth, should be anywhere near 108, right? I think it should be a lot lower. But the current climate we're in, geopolitical events, war in Ukraine, a lot of juxtapositioning by many in the Asia space for some potential. I just think there's, we got something brewing. Had a lot of crosswinds. Most of these charts do not correlate well with each other, meaning that everything's just frankly quite harebrained, right? So the best I can do for any subscriber, at least from a risk management perspective, which is the reason I was brought into this role, and with the management and the owners of Auvoria, we agreed that the smart thing to do was to give everybody a macro-based education on the markets and how everything trades, but also spend most of our time trying to help understand how all this plays into your trading from a risk management perspective, right? So that is the task, if you will, that I put in front of myself over the last 2 years in Auvoria land, and for all of our other clients at First Down and our advisor partners. So with the education, it goes the same with me. So the real question, and quite frankly, looking at the Forex Factory calendar here, you can remove some of these and focus just on red-only folders like I do. But when it comes to anything Federal Reserve, right, which, as you can see here, we don't have as much being talked about, at least from the Federal Reserve this week, right? They were talking about the high employment number beat last week, and that if you look at the Consumer Price Index, which is due out tomorrow, right, they the forecast currently is for a 1.1%. It'd be pretty interesting if that number came in much lower than that, right? Which, if you peel off energy and everything I just showed you, would make sense, right? So Steve, how does this affect the currency markets? Well, I think what it would probably do is serve the purpose of reversing the dollar, and maybe bringing more light to other markets, right? So let's go take a look at the dollar on trading view. And you can see here, we've pulled back a bunch. I'm almost of the ever-changing theory, if you will, that I don't think the Fed can raise any more rates. I mean, there may be a certain type of formality, chessboard move, if you will. Quite frankly, I think it would be just building a false facade that the Fed's ready to step in and curb inflation, right? But peeling away all the layers you see from the crap that gets pitched out from financial media and everything out there, which the vast majority is almost always wrong and very incorrect. And if it is correct, it is correct based on past trends, not what's going on right now. So there's been a big shift, a sea change, if you will, since the middle of June. So I think it really behooves everybody to take a look at, surprisingly enough, I have clients that look at FinViz before they'll look at what's going on elsewhere. Even some older clients, which is great, right? Because I want them to see what's going on. Now, not everybody can look at a group of charts like I can rip in through this and make suppositions on what's going to happen, right? But all we need is just a general guideline to understand how would this affect our trading, right? So if in fact they do not continue to act in a hawkish tone, raising rates, right? Cooling out to the children in the circle of the apples, as I've used an example many times, then what do? Well, they could do nothing. I think that would surprise markets, right? You're always looking from the risk standpoint of where the max paying trade is in anything, right? At least from the standpoint of an analyst. So as I look at the markets, I think the max paying trade certainly could be the Fed doing nothing. I could be completely wrong the next month or this month, and they could raise 50, which I think is a flat out mistake based on what I'm seeing. So I just wanted to do a quick broadcast to kind of give you an overview, and it's really just a 2-day update, a little more of an update than what I talked about extensively the last 2 Saturdays. But just be concerned of a potential really rip and reversal here in the U.S. dollar. and show you more specifically here from a larger perspective on the screen I'm showing now. So for trading views, so an absolute face ripper. This is the concern of everything that's been going on. Dollars going up at the same time. Bonds are rallying too, but we've gotten a bit over in terms of the movements up, so we're seeing some pullback. And it's hard to really read into any of this, I mean, the answer currently, and has been since, I don't know, the middle of May here at the bottom. I mean, the answer really has been a period of sideways trading over whatever period of time, and then a rip higher in the daily, right? I mean, it's been an easy trade to play out, but we've moved very far and quite fast if you look over a monthly perspective. And I'll show this chart on a full screen. I mean, here's where we are. I mean, all-time high of the dollar, at least in damn near my lifetime. It's right here. Right, but this is a completely different time. Right, but in terms of just modern times, which really I just look at the last 20 years, so you could take a look essentially from the highs of the last 20 years. I mean, we're absolutely capped in the 120 area. Are we going to get there? And I have no clue. If we do, it's going to be a lot of multinational corporations paying a pain trade price from an import-export standpoint because the dollar's too strong and it's just wrecking their exports. So just keep that in mind as a common theme. I think from at least a monthly candle, we're outside. I wanted to show you guys this, but see how the last month, we've been absolutely riding these Bollinger Bands up. I mean, this is not normal. I mean, we're way outside the norm from a monthly perspective in currency land. And, this is just, we're just looking at essentially 2 years right here and before this crazy line right here. It almost seems to separate the Old Testament here of trading and the New Testament, right? But this has actually been pretty interesting perspective that I would just look to see how that would actually play out going forward. Let me take a look here. Let me double check our streaming here, make sure we're okay. Alrighty. Let's jump back. I'm not going to get too much into this. Let's just take a look at the S&P. This is the index. You can always look at the ETF, the spiders, both some of the most liquid traded instruments along with the ES on this entire planet. Hundreds of millions of shares exchange hands every day on the spiders. So you can look at that as an example of that. But as anything, we've had some summertime volumes a little bit lower, although you just wouldn't seem like it because volumes are, and again, this is strictly a monthly chart. So if we drop back to daily, it seems like we want to burst higher, but this moving average line's holding us back down. So if we can get above that, or any sort of news which may not come out this week, we could just completely be treading water for the rest of the week, which is entirely possible. Looks like we're trying to burst out above that, so keep that in mind if you're trading any of this in any variation on the MT4 platform. Let's see what else. There's Euro US dollar. Went through a lot into channels this week. Underneath here, at least from a volume perspective, it's really no man's land down here. There's no volume because we haven't been down these levels in a long time, right? I mean, we are not that far away from, full parity. And I think it's almost like we should ring the bell of 1 for 1. Isn't that crazy? We're basically at it right now in terms of parity. So, let's see what else. Let's take a look at GDP. Daily the chart. Yeah, much different than I talked about. I'll look at the weekly real quick. Still riding those bands down, see that? Typically when you see scenarios like this playing out, you're due for just an absolute face ripper back up because everybody's loaded the boat short. May or may not be the case. The problem with that type of prognostication, which could be wrong, is that the viciousness of how far and how fast and when it comes, those are all variables that are hard to put any kind of finger on. Just know that the risk builds. That's the key. So US dollar Canadian here. Notice the torrented pace of the dollar's ascent in relation to the yen hasn't been quelled by the unfortunate events of Prime Minister Abe, who our hearts and minds go out to the Japanese people on that, and may he rest in peace. I really would have thought it would have brought more volatility to the price of the yen, and it hasn't. So Euro GBP, crazy how that's how accurate sometimes these both I guess you can call it a yellowish line, gold colored line, and then a red line. These are the squeeze zone support and resistance indicators. They're based on a whole myriad of factors. Desan, developer of Variable, is the developer of this. Look how it just absolutely nailed the top of this current move, and then just boomed down on the euro. Crazy how that happens. A lot of uncorrelations going on. Let's take a look in crypto land. We've really been treading water here for quite a while. Jump back in the daily. This tells the story. A step down, a sideways, build or a balance area or auctioning between certain smaller areas, and then another step down, which is what we're looking for next. At some point there's going to be a crescendo event here. You'd think you'd see it every time we have a sell-off, but there's no rally. Since this weak hand's changing strong to weak. Could be stops blasting out, right? The stops are getting placed down here, right? So what's going to happen? Eventually we're going to have just a measured move through this whole area. I think ultimately down to that 10 to 12,000 area, which a lot are looking for as the ultimate launch point from the breakout of this in early 21, right? I've talked a lot about that in the past. Certainly could be a place to look at, The problem is there's just an increasing number of what I like to call high hold on for dear lifers that were riding the big boat of the party and throwing gold pieces off it, and everybody's loading the boat and looking for the mania, and now they're just starting to quietly dive off the corners of the boat, right? And then eventually there'll be nobody on the boat or it'll sink. So this happens a lot with risk assets. The marketplace just, when the baby with the bathwater goes out, as I often like to say, the first areas to go are the areas that were newly invented, right? There are plenty of examples of this over the last couple hundred years. I don't care if it was flowers in the 1800s in Europe or, NFTs over the last 2 years. When you have just way too much cash sloshing around globally looking for things to do and very little to offer it in the long term, you get these kind of manias. So I hope everybody heeded my warnings on all this, and you weren't overloaded in crypto back when it was up at the highs, because I'm pretty sure that's going to be it for quite a while. And as always, one of the risks of listening to too few market strategists like myself is that we always could be wrong, right? So the risk management rule for this week is to get a consensus of experts. Lots of people out there, men and women, much smarter than I in this field, that I will always suggest followers bounce ideas off of, or look to see what they're saying. Could be a completely different complex than mine, right? Anyways, with that, I wish everybody a great week. Steve Vetterl, Midweek Market Strategy Chat. Today's the 12th of July. May the trades be with you.